Hello, guys. How we doing tonight? This evening, I should say. Hopefully, you guys all had a great weekend. Do want to apologize for the late post on the other one, the price action review that covered both Thursday and Friday. Will be uploaded in a second here. So if you guys missed it, it will be available for review. Had a big week, a big weekend, but in the markets, not much. It wasn't much of a heavy news week, but as we can see just right here on our chart right now, we had a pretty sizable week with almost a full reversal on Friday. A little less intense on our most bearish asset, which is NQ, right? Of course, we can see this very easily with some lower time frame SMT, but on ES, we went a little crazy here. Just a 2% day, but still pretty awesome when you see the rest of the month that went pretty uneventful, right? If we just bring the monthly open here, let's start with that. Let's bring our monthly opening prices. If you guys are unfamiliar with the indicator, you can find it at ristatistics.com. Little shameless plug there. But as we can see, I wanted to see a bearish month. So once we saw this initial move lower, I was quite happy. And then motherfuckers just fully reversed on me. So if you would ask me, where do you think it's going, Ollie? I would tell you, I don't fucking know. And that is the most honest answer you will get from me at any point in time. Now, if we're being a little more subjective, and let's go through our, not our checklist, but let's go through our system and actually find it. What do we see? Well, step one is ranges. We are trading within this range, and we now have a bearish range that we can also frame off of. Okay, cool. We return to the first discount inefficiency of our larger bullish range. Did we respect this first discount inefficiency? Oh, that is what I'm trying to say. There we go. In an order block context, we have two levels. We have the opening price of the order block, of course, if it does not have a following fair value gap. If not, we use a full candle. And then we had the midpoint using the body in this case. What do we see? Did we respect this midpoint? Let me zoom in to be sure. Yes, we did. What does that mean? Well, we have now completed our retracement objective. We are respecting our discount and efficiency. This is an extremely bullish signal. Now, what does our bearish range tell us? Well, right now, it doesn't tell us shit. Why? Because we haven't reached our first premium inefficiency here, which actually we do not have one right up until this inversion fair value gap. I think I've said this before, but when it is too far in premium, and if you guys want actual numbers, I like to split it into quarters. And as we can see, the IFVG is mainly in the last quarter. I like to go down the time frame to find a more precise level. So I'll go down to the 4-hour, looking at the same range, and just to adjust it so you guys can see correctly, looking at the same range, I'll use the first premium inefficiency, which in this case is this beautiful guy. There's also this guy, which is a little bit old. I'm not going to lie to you guys, but we have yet to invalidate it. So I'm looking at this inversion fair value gap and this bullish order block, bearish order block, sorry about that, guys, for potential moves lower. And for that, especially with the news we have this week, if you guys saw the announcement in the Discord, right? Just being extra precise for the people who are going to be watching that on YouTube after. We have news every single day except Wednesday. And now you might say, well, on Monday and Tuesday, we have no red news, right? They're only orange news. Well, that's Forex Factoring doing its thing. For me, they are high impact news. Why? Because I use data. And those news specifically provide volatility to the markets. How do I know that? Economic news analysis on Rice Statistics. So because of that, I'm treating both those days as high probability trading days. Now, when we have so much news so spread out in the week, we expect a very simple pattern, right? And what is that pattern? A classic week. Now, this can be a classic sell week, right? If, I said a classic sell week, but drew a classic bullish week, so a classic buy week. This isn't a bullish scenario. If we expect a bullish week, we'll see our price open. We want to see a trend lower very quickly and early, and this price continue to expand and seeing a Friday retracement to close. In a bearish scenario, it would look something like this. We are not expecting any early onset consolidation, We are not expecting any sort of Wednesday reversals and early on movement and fully reverse. We're expecting a trending week. So best case scenario, if we want to remain bullish due to these signals that we see on our daily chart, well, I want to see price invalidate this inversion fair value gap. Now, I will remove these levels, right, that we just discussed for the 4 hour, but I want to see price invalidate this gap, right? I want to see it fully reverse. I want to see price close above it. And if we look at ES, it's very easy to see that, well, ES is almost at the peak of that range. So once ES takes out this range and we now establish a potential SMT, then we will also establish potential for reversals. So if on Monday we see a crazy fucking day, we go super bullish, ES takes out this high, NASDAQ does not, then all of a sudden, scenario number 2 here that we see as a classic sell week is a much higher probability than our scenario number 1. But what if Monday trades lower, right? Trades back into this candle. Of course, I'm not looking for this low to be taken. If it is, then I am fully bearish and will look only for shorts. But if we trade back down into this range, reach the midpoint, we have an inversion fair value gap here, which we just inverted. If we trade back down here on Monday, then I'm going to be expecting this scenario, looking for a bullish week, targeting external prices on a bullish scenario, right? What we as ICT traders, sorry if you guys are not ICT traders and I just put you guys in a group, call buy-side liquidity, right? We're looking for the liquidity resting above these highs for the pending orders. So very simple framework, always based on news. And once we take into consideration the ranges along with the inefficiencies that are present within these ranges, and more specifically, how price reacts to our key levels, right? How we did not close below this low at all. And don't tell me again, I know if we zoom in, we can see it that we did not close below it. Oh, well, on this one we did. Why did I misdrew it? I think I did misdraw it at the beginning of this call. I think I drew it like this. But here we did close below it. What is the close of this candle? 23,221.75. So we did close 2 points below it, which is a mohawk. It is acceptable, right? If you're wondering how much is okay, it's 3 to 7 handles. That is okay. More than that, and I consider it a disrespect. So this is a tricky one, to be honest. Once again, I'm really just going to be focusing on the news to show me where price wants to go, right? So I'm going to be referring to what we do on Monday to understand. And with news on Monday, I'm expecting more so of a trending day. Of course, our intraday statistical frameworks will tell me everything I need to trade that specific day. So do I have a clear direction for Monday? No. So I'm going to trade intraday frameworks, and I'm going to use Monday's range to establish how we're going to move for the rest of the week. But to be honest, with ES inducing this high so close, I am really expecting us to go and reach for it right away. Do we have any questions? Pretty straightforward outlook, right? We had a very bullish Friday. I want to see that trend continue. That would be the best bet scenario. But if we close through it and we show signs of being bearish, then I'm going to be expecting these levels to be remet with, once again, just a classic framework of a trending week. Now, I'm not seeing anybody type, so I'm guessing it was all clear. I'm going to give you all a second. Maybe we have some final questions. All right. I'm seeing you type, Alex. I'm going to give you a sec. All right, all clear. All right. I'm always surprised. It's a good thing that it's all clear. I mean, I take it as a compliment, right? And I'm guessing, I see a lot of familiar faces here, but you guys don't need me for these outlooks, right? Well, hopefully you don't. And I really do hope that you're not taking these outlooks as an opportunity to be like, okay, well, he knows where the markets is going. Cool. No, learn from them. Learn from them to a point where you don't need me anymore. And the only reason you come in here is, well, first of all, to say hello, because, I miss you guys, but also just to confirm and see a different perspective sometimes. Hopefully, you guys are learning from these. I hope they are providing value to you all. But for tonight, that will be all. As I said, the peer reviews from last week will be posted here in a second, actually, in 2 minutes. They will be live on the YouTube. So if you miss those, they will be available there, especially a little bit harder days. But yeah. I look at my chart first and then confirm the idea, and sometimes I miss some stuff. So yeah, still golden infos. Lovely. That is exactly what I would wish anyone to do. Look at your chart, establish your own outlook, and then go talk to Ollie to see, hey, maybe I missed some stuff. Maybe actually Ollie missed some stuff. That happens too, guys. You never know. But on that note, we're going to call it a night here. I wish you all good luck trading this week. We are going to have at least 3 PA reviews. We'll see about Friday, but we'll have Monday, Tuesday, and Thursday for sure. So I will see you all plenty this week. Good luck trading. Have a great night, guys.